Washington has backed off from its trade war, but is that enough to salvage the dollar? The dollar has continued its surge after the US and China hit the brakes on their trade war, slashing the massive tariffs they had imposed on each other for 90 days. The dollar, though, is still below where it was when those duties were announced in early April, and investors have been selling it off for months. Francesco Pesole is an FX strategist at ING. Francesco, do you think this trade pullback is enough to decisively change the direction of the dollar?
Well, I believe it really depends on what data will tell us about the damage that has already been done to the US economy. This is really the key. We're a bit of a crossroad for the dollar at the moment because I think a lot of risk premium that was attached to the dollar has now been trimmed. And obviously, markets are welcoming the developments in terms of de-escalation on trade tensions between U.S. and China, but on a broader level from the Trump administration. But now it's a question of really understanding at what position the U.S. economy is. And we're not too optimistic on the dollar from this stage. We think there is still room for some sell-offs in the dollar when U.S. data start to show that indeed it's been a pretty rough quarter. It will be a pretty rough quarter ahead as well for the U.S.
What data points are you looking out for, Francesco? What do you expect to see there?
Well, I think the consumer story remains the most important one. In the years of Biden, economists were continuously surprised to see how resilient the U.S. economy was despite high rates. And the reason for that was really this huge resilience of consumer spending. And this is the real threat when we look at forward-looking indicators like consumer confidence, PMIs, the small business surveys. They all seem to point to not just higher prices, but a loss of confidence from consumers. So the question is really whether this a bit of chaotic delivery in trade policy by Trump has left, tangible marks on consumers, because that can take quite a lot. It can take quite a lot to rebuild that consumer confidence that has been the real engine of U.S. growth.
Do you think that despite the de-escalation, we'll still see a deeper shift of international investors out of U.S. assets ongoing that drives the currency down?
That is clearly on pause now. And I think there's a bit of a reassessment of whether that rotation might have gone too far and whether there is a case, obviously, to rotate back to U.S. assets. I think it will take quite a lot of time to rebuild the confidence that markets had in U.S. dollar-denominated assets before sort of Liberation Day and then the whole market turmoil. And again, I think they will need to see first that data has not deteriorated too much, because there is a risk of a bit of a snowball effect where poor data on growth then trigger concerns related to budget deficit and the sustainability of U.S. debt.
What about China then, Francesco? Is the yuan a key beneficiary of this deal?
Yes, it is. But the yuan really throughout this whole market turmoil and trade wars has really been a very stable currency. And this is what we had flagged at the beginning of the trade war. We really thought that the PBOC would have not allowed the yuan to drop too far, would have not endorsed any devaluation speculation. And this is what they did. So if we look at this period, the dollar has appeared to be really the volatile currency and the yuan has appeared to be the stable currency. And so I think this is a success for what Beijing wanted to achieve. Deliver this notion to markets that the yuan is a stable currency, is a reliable one, and trying to push on this effort of de-dollarization and a shift towards yuan. And that I think this period of the past few months can be beneficial in that direction.
We've had a lot of talk about a so-called Lago accord, under which countries would increase the value of their own currencies against the dollar as part of a trade deal. Are there any signs this is happening?
Not really. I think, the issue with the Mar-a-Lago discussion was that the Treasury was expecting as a first reaction to tariffs for the dollar to appreciate, and that would have helped shield U.S. consumers from higher prices due to tariffs. Obviously, the opposite happened. So before I think the U.S. can consider a devaluation of the dollar or a sort of forcing other trade partners to step away from their big dollar holdings, they first need to make sure that the dollar is stable. They need to make sure that the inflationary shock has been absorbed. So I think this is something that can come up in following months. Again, this Mar-a-Lago discussion, but I don't think it's an imminent thing.
That was Francesco Pesole of ING. Don't forget, you can watch more videos on Reuters.com.